then we need to get out of it. But then again, we're gonna have to increase our budget quite a bit because of the dollars that this is paying for that Seward County's not paying. The federal government, through these funds, are paying a lot of the expenses that we would be paying as the county on the sheriff's general fund. And if you look just at overtime alone, there's a lot of overtime. Let me find where. No. 22-23, the overtime that was paid either through 24-12, and if you want verification, I can show you, or 24-14 was $61,520. 23-24, the overtime that was paid out by these funds was $70,221. 24-25, the overtime that was paid out by these funds collectively was $119,259. So in the last 3 years, the feds have paid over $251,413 just in overtime. So this is something that we really need to look at. There's money sitting there. I know we don't all think that the task force is the greatest thing out there. But why would we walk away from the money that's supposedly coming in? Now, I realize that Treasury, the sheriff's office, got into a pickle, and that there will be no money for another year. But the justice funds, there are funds coming this way, and we're looking at probably shy of $2 million that are gonna come in the justice fund, 24-14. So my pitch to you folks is to approve the ESAC so that we don't go out of compliance, that we stay in compliance with the federal government, and that we can allow these funds to come into the justice fund so that they can be used for overtime. Right now, we're using funds for utilities. There's a lot of things that we're using these funds for that, if you don't want it, that's fine. Then we're gonna have to budget for it in the main budget, in the sheriff's general fund. And that's gonna cost the county a lot of money. So I don't understand why we would wanna walk away from some money right now, but I do think that there's some things that we need to work on in the future. But to do it right now is not the time. We need to move forward, get the ESAC signed, so we remain in compliance. As I stated last week, I don't have a lot of faith in the federal government doing what they say they're gonna do. Now, with that being said, they say they're gonna give us funds, but right now, we're not relying on those funds. But we will be relying on those funds if we don't increase our budget. So we need to either increase our budget by probably $200,000-300,000, if not more, and utilize, to have those funds to utilize for the sheriff's office, with the funds coming from the federal government that would be sitting there for, kind of like a rainy day, kind of like the inheritance fund. If you got something that you need to cover, you can use those funds. But if not, then we need to increase the sheriff's budget right now.
So I have a couple things. First of all, we don't have to increase the sheriff's budget. We don't have to fund any of those things. We don't have to. But we get to set the budget and he decides how he spends that budget. So
Okay.
I just want to counter that and say, we do not have to raise it. And previously we agreed on an amount that he said he was going to make work. So I just, for all intents and purposes, I want to say, we as a board do not have to raise that budget. We get to set his budget and he has to try to,
Agreed.
So I just want to clarify that. The other thing is, we should come forward, Mike. Thank you. The other thing is, on the report, and I just need some clarification here, under, on page 3, under item number 5, which is internal controls, says, and I'm just gonna read it, it says the agency certifies that equitable sharing funds are maintained by its jurisdiction, and the funds are administered in the same manner as the jurisdiction appropriated or general funds. I'm gonna just continue and then I'll go back.
Are you on ESAC?
Yes, I am. Page 3, item number 5, and it's that second paragraph there. So I'll reread that. Agency certifies that the equitable sharing funds are maintained by its jurisdiction and that the funds are administered in the same manner as the jurisdiction's appropriated or general funds. The agency further certifies that these funds are subject to the standard accounting requirements and practices employed by the agency's jurisdiction in accordance with the requirements set forth in the guide. Okay, so this is not me saying I'm for or against signing this, I wanna be clear, but at the end of last year, and several times, I'll be honest, several times I have asked, why is the board signing claims for those dollars that we do not have any, I mean, we have really no say over them as the board, right? We don't set the budget for them, we don't say how we're using them, how we're not using them, really that's up to you at this point. And so from an internal controls perspective, I can't say that that statement is correct. We are not administering them in the same manner as the appropriated or general funds. Am I wrong? Can you tell me that I am not interpreting that?
I would have to look, I don't know exactly what that means, I don't know if it means, for example, you have to do, if you give folks a bidding process and that sort of thing, I don't know.
So, and just telling you the way that I interpret it is that we have to do the same thing that we do with the general funds, right? And the general funds are overseen by this board. Those funds are not overseen by this board. And that is why on several occasions I have said no to claims. Not, and it's not just been this, I've said no for other reasons too, but because I don't feel comfortable saying that we have oversight of those funds, because we don't. And I don't feel comfortable with that. That is not the process that's set up right now. Doesn't mean the process cannot change and that there couldn't, be a fix to that. But I want to say I have concerns with that because we really don't have any oversight of it. It's just, here's the claim, sign it, here's the claim, sign it. Well, I don't really necessarily agree with it. Right.
Well, that's one reason I suggested that a board member be part of that decision making.
Okay,
When was that?
I don't feel, I'm not sure about
I
that.
have no idea what you're talking about.
I mentioned it in either the last meeting or meeting before, but I had discussed it with Wendy and suggested that I have a board member, either chair or my liaison, be part of that decision making.
I've not heard this.
Are you talking about claims from 24, 12, and 14?
Yes.
Just specific to those funds?
Correct. If you wanna purchase something, that board would be part of that.
So would that be, yeah, sort of, right? Would that be saying like, side question, right now, if you wanna pay for, we've been using boots a lot, so if you wanna pay for a new pair of boots, who authorizes that? You just pay for it? Just write the claim? Does
Well,
does
it's,
Blake sign up on it? What happens?
if somebody needs a new pair of boots, if it's underneath the control of the Captain Nogi would approve those boots. If it's under the civil process courthouse staff, then Captain Borges would approve those boots.
Okay, so my question is, how is that oversight, like, how would the board, a representative from the board be integrated into those decisions? And boots is a small thing, but I'm just
I
trying to make it
understand,
small.
but it's like if we wanted to purchase something, then I would run it by whichever board member is part of that as well, to let them know why we wanna purchase it, what it's for, and see if they agree with me on it.
So basically a PO system, like Daryl was saying.
Purchase order.
Oh, purchase order.
Technically, we couldn't say, you have to do this. This is the board telling the sheriff, you gotta use a PO system. Now, it almost sounds like the sheriff is saying, I'm willing to do that. And so if that's the case, that's a good way to maybe establish a paper trail. And again, a chain of oversight in a sense, if we're into that deeply. And I don't know who assumes that role, Mr. Liaison.
I would say that I'm not opposed to something like that, and I think that that's something that we need to look into further as to what would qualify under that, and would be. I will also state that as part of the certification for the ESAC, it does state under penalty of perjury, the undersigned officials certify that they have read and understand their obligations under the guide to equitable sharing for state, local, and tribal law enforcement agencies, the guide, and all subsequent updates. This equitable sharing agreement and the applicable sections of the Code of Federal Regulations. The undersigned officials certify that the information submitted on the equitable sharing agreement certification form is an accurate accounting of funds received and spent by the agency. So there's several things that in that statement that holds the board and the sheriff responsible for knowing and understanding the guidelines that are set forth by that specific guide. With that, I would like to provide, go ahead.
Interrupt for just a minute. I found the section in the equitable sharing guide about the, bookkeeping procedures and internal controls. It says a state, local, or tribal program participant must, under maintaining and administering funds, maintain equitable sharing funds with the jurisdiction and administer funds in the same manner as the jurisdiction's appropriated funds. Funds must follow all jurisdiction policies and procedures regarding procurement and approval. The jurisdiction must administer and maintain bank accounts, accounting codes, and other financial documents in the same manner as appropriated funds. Agencies are prohibited from maintaining or having direct access to federally shared funds.
Okay, so just recounting, that is what I was saying. So when we're talking about like budgeting, technically that should be handled in the same way that we're doing everything else.
When you say budgeting,
For the funds that they're planning to spend in 24-12 or 24-14.
yes.
And, hypothetical here, let's say a drop, because we have to set it for whatever's in there at the time of budget, right? Hypothetically, 6 months down the road, we get a drop. Should that not be brought back around to determine where those dollars will be spent?
I don't know if it needs to be brought back when the drop comes in, but when they're spent, yes.
Okay. Okay, sorry, go ahead, Rita.
Sorry to interrupt.
Okay.
So, as I was notified that this agenda item was going to be placed back on the agenda, I began to work on putting some of this information together because I do think that it's relevant in relationship to the board's decision to agree for Commissioner Amick to sign this document or not. I'm just gonna read from this because it's taken me a lot of time and it's taken a lot of energy for me to be able to put this together. I would like to state publicly that I have done my best to try and table this item so that the county board can do a more thorough review of all documents that have been withheld by the Seward County Sheriff that pertain to Treasury Equitable Sharing Funds from 2024 to 2025. I took an oath of office to fulfill my duties as a county commissioner and I take that oath seriously. I would also like to state publicly that I do have concerns about retaliation in relation to the subject matter that I am prepared to share. To the best of my ability and with the information that has been provided as of the morning of 8/22/2025, I have created a timeline to show cause for a recommendation to table the signing of the ESAC for the Sheriff's Department that has been resubmitted to be on the agenda for today. The changes that I found on the resubmitted document include the following. The agency fiscal year 2026 budget listed on the previously submitted ESAC was $2,271,881. The updated version reports the agency fiscal year 2026 budget to be $2,019,919. The ESAC document should reflect that this is a proposed budget as the budget has yet to be passed. The other change that I noted was under the heading of other income. The types were rearranged, however, the items were the same as well as the amounts. For several months, we have heard from the sheriff that drops were coming to support staff and expenses that were considered by the sheriff to be allowable for the equitable sharing guidelines. I, as well as other commissioners, have been asking for documents and letters that Sheriff Vance has been referring to for months without production of said letters. On Thursday, August 14th, Commissioner McCarrick forwarded me an email with an attachment regarding a letter from the Department of Treasury that was signed 7/31/25. This letter's heading is regarding follow-up to Treasury Executive Office for asset forfeiture letter dated May 30th, 2025. This letter states that following the compliance review of Treasury Equitable Sharing Funds, the Treasury Office determined the Seward County Sheriff's Office spent $762,504.32 in Treasury Equitable Sharing Funds for non-qualifying replacement officers during fiscal years 2021 to 2024. The letter goes on to state that due to the large amount of Treasury funds expended for these impermissible salary expenditures and the complexity of the issue, I place the Seward County Sheriff's Office in a do not spend status until we resolve this issue. The letter goes on to further state that the Treasury has identified $729,291.93 in equitable sharing payments that are pending for the Seward County Sheriff's Office. The Treasury states this office will extinguish these pending disbursements and reevaluate at year end to determine if there are additional disbursements to offset the outstanding repayment of $33,212.39. Another reminder was issued that Seward County Sheriff's Office was in a do not spend status. Based on this information and other concerns, I requested that the ESAC report be tabled until after the Department of Treasury had time to reevaluate at year end so that the board could be provided with any relevant information by the Department of Treasury based on their documented ongoing review. On Wednesday, August 20th at 8:40 a.m., I sent an email to Sheriff Vance, members of the Board of Commissioners, and the County Clerk requesting additional information related to the ESAC that was on the agenda the previous day. My email reads as follows. Good morning, Sheriff Vance. I am emailing requesting additional information related to the data that is part of the ESAC that was on the agenda yesterday. Can you please clarify under other income the following items? Reimbursements. Please clarify what these reimbursements to these accounts were for and where the funds came from to make these payments. Justice funds, $1,273.76. Treasury funds, $6,566.31. Other wrap payback. Based on our conversation yesterday, this was incorrectly paid out of Treasury for these services and a transfer was made from your sinking funds to the Treasury account. Why was this not paid out of Sheriff's General Fund budget? When did they stop paying for this? Treasury, $31,600. Sale proceeds. What sales does this consist of? What was sold and when? Were these items that were originally paid out of Justice and Treasury? Justice amount, $5,600. Treasury amount, $9,491. Thank you. End of email. On Wednesday, August 20th, 2025, I received an email from Commissioner Pekarik at 9:07 a.m. with additional documents that came from the Treasury Department in addition to other documents that were provided by staff at the Seward County Sheriff's Department. These documents included 2 letters from the Treasury signed May 30th, 2025, and another letter signed July 31st, 2025. In addition to the letters, I received a portion of an email exchange between Sheriff Vance and a member of Homeland Security and a letter from the Senior Operations Manager of the Seward County Sheriff's Office dated May 19th, 2025 with an explanation of the wrap repayment listed on the original ESAC that was submitted to the board for signature on August 19th, 2025. That letter, just to note, came after the agenda item. The letter from the Department of the Treasury signed May 30th, 2025 sent to Sheriff Vance has a heading that reads, regarding follow-up to report on the Seward County Sheriff's Office of Equitable Sharing Compliance Review Letter. The letter states that on June 17th, 2024, the Department of the Treasury completed a review of the Seward County Sheriff's Office compliance with the requirements of the Department of Treasury Equitable Sharing Program and forwarded a letter to your office. As stated in that letter, several issues related to the controls and procedures associated with the management of Treasury Equitable Sharing Funds were identified. You were asked to provide written acknowledgement confirming your understanding of the requirements along with specific information and documents. The letter goes on to state the Treasury's current position on each of the findings. 1. Inadequate segregation of Treasury Equitable Sharing Funds. Advance payments, loans. We consider this issue resolved. 2. Suspension and debarment requirements. We consider this issue resolved. 3. Non-conforming expenditures. We are satisfied with the corrective measures taken with respect to the confidential fund account and the impermissible payment to Fillmore County. However, we are concerned with the significant amount of Treasury Equitable Sharing Funds that have been used to pay for salaries of Seward County Sheriff's Office personnel that did not qualify as replacement officers. Specifically, in fiscal years 2021 and 2022, the Seward County Sheriff's Office used $236,104.33 in Treasury Equitable Sharing Funds for impermissible salaries. charge provided with your response letter revealed that the SCSO spent approximately $338,374.84 in fiscal year 2023 and $188,025.15 in fiscal year 2024 for non-qualifying replacement officer salary expenditures. The total amount of impermissible replacement officer expenditures for fiscal years 2021 to 2024 is $762,504.32. In your letter, you requested that TEOAF either waive the discrepancies with the acknowledgement that these errors will not happen again, allow the SCSO to submit other wages that may qualify in place of the ineligible wages, or agree upon a payment plan because of the hardship it will cause the county. The letter further states that due to the large amount of treasury funds expended for impermissible salary expenditures and the complexity of the issue, we are placing the Seward County Sheriff's Office in a do not spend status until a decision is made and we resolve this issue. This office will contact you once a decision is finalized or if we need additional information. While in a do not spend status, the Seward County Sheriff's Office is precluded from receiving any additional Treasury equitable sharing funds and from spending or obligating any Treasury equitable sharing funds currently on hand. This letter specifically states that Treasury funds were not supposed to be spent. However, payroll expenses and other claims continue to be submitted to the Seward County Board of Commissioners to be paid despite notification that the Seward County Sheriff's Office was in a do not spend status of Treasury funds. The board had no way of knowing that we should not be approving these claims as Sheriff Vance had not provided the board with any documentation stating this. I received a second letter signed August 20th, 2025 from Commissioner Carrick that was sent from the Department of Treasury and signed by their office on June 17th, 2024. This letter addressed to Sheriff Vance has the following heading: regarding Seward County Sheriff's Office Equitable Sharing Compliance Review. This letter discusses the review objectives, review approach, and the conclusions. I would ask that you please review to the document as I did not retype all of this information. I'm gonna go to page 3 of that document. Our review found several impermissible uses of treasury equitable sharing funds as follows. In fiscal year 2022, the agency used $10,000 in treasury equitable sharing funds to establish a confidential funds account. However, in fiscal year 2023, the agency reimbursed the treasury fund $10,000 and reported this amount as other income on the fiscal year 2023 ESAC form. Also, in fiscal year 2022, the SCSO used $300 from the confidential funds account to pay an informant and used $300 in treasury equitable sharing funds to reimburse the confidential funds account. Because the use of the $300 was sufficiently documented, we have decided to allow the expenditure. No similar exception will be granted in the future. In fiscal years 2020 and 2021, the SCSO transferred treasury equitable sharing funds totaling $31,600 to Fillmore County, Nebraska, for participation in a rural apprehension program. These improper transfers of equitable sharing funds were reported as expenditures on the agency's fiscal years 2020 and 2021 ESAC forms. Note in fiscal year 2020, a total ESAC form reported expenditures were underreported by 10 cents. In fiscal years 21 and 22, the SCSO used treasury equitable sharing funds to pay the salary and benefits of sworn and non-sworn law enforcement personnel that did not meet the above definition of task force replacement personnel. Specifically, the personnel were already employed by the SCSO and were not hired to fill vacancies. The total non-conforming expenditures amounts reported on the agency's ESAC forms for fiscal years 21 and 22 total $59,303.15 and additionally $176,801.18 respectively. To resolve these issues, please do the following. Please provide written confirmation that all involved personnel understand the proper use of treasury equitable sharing funds related to confidential expenditures, transfers, and task force replacement personnel. Please provide a report generated from Seward County FMS showing that the agency's treasury equitable sharing funds account has been credited with an amount that results in a balance that is consistent with a fiscal year 2022 ending balance of $3,398,839.46. In addition, please please provide acknowledgement of your understanding that the agency's next to be filed ESAC form will contain an adjustment that results in a reported balance of funds with the corrected fiscal year 2022 ending balance of funds as discussed above. Specifically, the SCSO should report $267,704.23 as other income in the treasury column, together with a corresponding explanation on page 2 of the form that states, to correct for errors identified during a treasury compliance review. Number 3, please confirm the permissibility of the use of treasury equitable sharing funds in fiscal years 23 and 24 for the salaries and benefits of task replacement personnel by providing this office with proof that the replacement personnel was hired to fill a vacancy created due to a federal task force assignment. Supporting documentation should identify the vacancy, include names of replacement personnel with hire dates and associated payroll ledgers. If the expenditures were impermissible, please credit the treasury account with the amount paid and supply this office with the supporting documentation of the corrections. The area that I would specifically like to focus on, as I feel that it applies to the current ESAC, is on page 3 of the letter under number 2. I reviewed the ESAC that was brought forward in 2024 and the $267,704.23 that was supposed to be listed under other income is not listed, nor is there a corresponding explanation on page 2 that states to correct for errors identified during a treasury compliance review. For the compliance review, these items were supposed to be listed on the next to be filed ESAC form. In addition to the letters from the Treasury, I received 2 letters from Sheriff Vance addressed to the Director of the Department of the Treasury Executive Office for Asset Forfeiture. These letters are not dated, nor are they signed. These letters reference additional documentation that were submitted in conjunction with these letters. However, I have not been supplied with these additional documents. I did send an email to Commissioner Bucaric after the letters were initially received requesting the signed and dated copies and additional information. However, I have not received any additional documents as of Friday, August 22nd, 2022. For further clarification, I also requested these documents from you, Sheriff Vance, as well last week. I worked tirelessly to go through the supplied documentation related to use of Treasury equitable sharing funds in less than a week. I have not been able to thoroughly review all documents, as we have had several board items on the agenda for August 26th that require time and attention. I'm not an attorney, nor am I an investigator. However, I will assert that as a Seward County board member, I was not aware of the information provided in these letters through the last budget year and subsequently passed claims without full knowledge of what was occurring. The withholding of information and lack of transparency from the Seward County Sheriff has caused the board to take action on items that should not have been done. Therefore, based on the significant amount of information that needs to be more thoroughly reviewed, including additional documents from the Seward County Sheriff's Office regarding the compliance review, a review of the external audit that the board requested earlier this year, and to ensure we are in compliance with the equitable sharing agreement and certification and all recommended adjustments, I recommend that we table the signing of the ESAC until February 3rd, 2025.
Any follow-ups about Scott? Mike?
Okay. So I was going through the sheriff's budget here, and, as I mentioned, the overtime pay, is currently being, not all of it, but some of it's being paid by 2412, 2414. Utilities for the sheriff's complex has been paid by either treasury or justice. These are all items that, if you give the sheriff his budget of last year with the increase in salaries, he's not gonna be able to cover expenses. And we're gonna have to be opening the budget anyway to pay his expenses, whether it be overtime, whether it be utilities, whatever is coming out of, treasury and justice, well, no treasury anymore, but just justice. Those are items that we're gonna have to pay for. And if we don't have a signed ESAC with treasury and justice, if there is a drop, that money won't be there.
We can't sign that document tonight.
So, just countering what you said, to be clear, because I know you weren't on board when the task force building was established. Much of that was established under the with the understanding, I can't remember wrong now, with the understanding that expenses related to that facility would be paid for out of forfeiture funds. So I will counter what you said again and say, no, we do not have to do that. Also, the patrol was moved to that building and the board did not approve it. Same way that the county attorney's office decided to move into their old offices and the county board did not approve it. So do we have to provide a place for them? Yes, we do, as directed by the board, and thus we would have to supply utilities. But it does not have to be there, and it does not have to be in that facility, just a point of clarification.
Those buildings are titled by the county,
Correct.
but if you sell them, all that money goes back to treasury.
You're totally right, yes.
So, we're, I guess I'm at a,
And I guess the other thing I look at with this is, this ESAC, let's say the current one expires August 30th, and we have to have a new one signed by September 1st, if I'm not mistaken. That basically takes us through the next year. Technically, we're out of compliance, but that doesn't mean that we cannot get back into a compliance at any time during that next year. From September 1 to August 30 of 26, anytime during that year, we can sign that ESAC and we get right back into compliance. We go past August 30 to 26, and we lose it all.
Where does it say that?
No, I talked to Wendy about this.
But I've not seen anything that says that. I've heard Wendy say that, but I've not seen any documentation that says we can go back into compliance, right? Has anybody seen that?
I actually sent an email.
It's in the equitable sharing.
So we have 1 year after not signed, that's in the guide, just to be clear.
Yes.
Okay, thank you.
You raised your hand.
This is right, you can go back into compliance, but it's not like that.
Meaning,
The bids move very slowly, and when you sign ESAC, it goes through all their reviews and everything. There's no telling how long it takes to get you back into compliance, but if it does go past that year, then you lose all that money. Anything that comes in while you're not in compliance, they can keep 100% of it, you don't need it.
okay,
That's not how I read the equitable sharing guide. Basically, what I read is that they hold it for disbursement.
until you're back under compliance.
Right.
Yeah.
On page 26, it says, under extinguishment of funds, an agency that remains non-compliant for more than 1 year or more than 6 months with a balance of $500,000 or more will be deemed ineligible, and MLRs will extinguish all approved sharing pending disbursements. Extinguishments are final, and the previously approved funds will remain in the AFF or TFF. Additionally, if an agency required to certify it can receive sharing payments, fails to certify, the sharing payment will be extinguished.
Okay.
I wanna just issue some cautions. It's obviously not just me, it's obviously up to the board what you do. But, again, you cannot budget for funds you don't have. So that language is concerning to me, as well as you can't supplant the budget. So that language is concerning to me a little bit, raises some red flags. Also, you're not only signing that you want to participate, as Commissioner Haynes said, you are certifying, you're making a certification that certain things are true to the best of your knowledge. You're making that certification to the federal government, so I would just make sure that if you're certifying that those are things that you know.
So, going back to my questions about that first language on number 5. I guess at this point, all of those things being said, would it not be in our best interest to establish that, to make sure that we are,
We should do that before we sign any kind of an agreement.
so figuring out whatever that looks like, if it's a PO system, if it's a board member, if it's 2 board members, if whatever that looks like, forward before signing it.
I would say that that is also what is consistent with what's being shared with us potentially with that audit.
And I think that I would also suggest, I mean, in fairness to, so that the sheriff's department knows what they're looking at, they should have some concrete things, if they're things that the board is requesting. Otherwise, we come back in October and nothing's changed. Things like if you want to see certain things, because if the plan is to pay for SROs out of that, there are certain things that need to be kind of set up.
Yeah.
And that's up to the sheriff's department, and they can do that, the board could have them come back with that, but I think in fairness to them, so they know kind of where they're going, set out certain parameters or expectations of what the board would like to see before considering it again.
Question, Mike, based on all the letters, it would appear as though we're not going to get another law, like drop this fiscal year, is that right? Based on what I'm reading, we will not get a drop from now until
From Treasury.
June. Yes, from Treasury.
Until their budget, their fiscal year is October.
The letter states until the end of the,
Fiscal year, doesn't it? So is that's there.
That was the end of the year.
I read it to.
I think I read two different places, I thought it was like two different places.
It says at year end, this office will extinguish these pending disbursements and reevaluate at year end to determine if there are additional disbursements to offset the outstanding repayment.
The physical budget is October. For the feds. I'd just like to say that I understand what Commissioner Arnold was saying to Commissioner McCart about the budget and our agreement on the budget, last year's budget, plus the salary raises. But if the ESAC is not signed and done by August 30th, then you put the sheriff's department in a bond where you're literally defunding us. All this agreement is certifying is those monies spent on there, that you signed those pay claims. That's what you're certifying. That money came in, and you signed those pay claims for that money to go out. That's why they call it a certification.
We also wouldn't have, Sheriff, if we had known that this information was out there, we likely would have not passed those claims. So therefore, because we didn't know that you were in a do not spend status, we didn't know that they were pulling back funds, we didn't know any of this information, we were passing on claims that we had no knowledge that this was even occurring. So you're asking us to sign and certify a document for claims that we passed unknowingly that were out of compliance. You were in a do not spend order and you continued to submit claims without us knowing that that was the case.
The only
And so
claim
we passed-
submitted after we were notified of that was one that had submitted prior to us receiving that letter.
I disagree with that. In fact, I know that that's not accurate.
When was the letter dated that